Hi, I'm Pete Kroll, and we are back with another episode of Dollars and Change, the expert's guide to sustainable and responsible investing. And we are at the U.S. SIF conference, the Sustainable Investment Forum in Chicago. And with me is a freelance reporter, Debbie Carlson, who I've talked to many times and have been quoted, thank you, many times as well. Welcome to the podcast.
Thank you, and thanks for being a source.
Absolutely, I like to be a source. Let's just start out with a little bit of background on you.
Sure.
How did you, where'd you go to school? Where'd you start out, and how did you get into journalism?
Sure. I always was a writer. As a kid, I went to school for journalism here in Illinois, Eastern Illinois University. And I had a journalism degree, started at, a small weekly newspaper in central Illinois in a college town. Had an opportunity to move to Chicago, which is where I'm originally from. Writing about futures markets at the Chicago Board of Trade, Chicago Mercantile Exchange. And that was my entree into business writing.
You're just sort of jumping in the deep end right there.
Yes.
Yeah.
Yes. Believe it or not, I had a desk on the Mercantile Exchange floor right off the pork belly pit.
Oh wow, that's fabulous. So you really were in the fat of it, I guess.
And so to speak.
Yes.
So I really learned everything on the job. I mean, when I started, I literally had no idea the difference between bullish and bearish. I had no financial background. My family were immigrants. They never invested. So it was all new to me, but it was fascinating.
Right.
Absolutely fascinating. And, I wrote about livestock, being at the pork belly pit, grain markets, stocks, bonds, currencies, and it was just really fascinating. And then kind of fast forward a few years, when I ended up working at Dow Jones for quite a long time. I was their commodities editor, and then I left to freelance, and that was 2012 when sustainable investing, or as we used to call it, SRI, socially responsible investing, just started really to be a thing.
Right.
And so I learned early on, there was interest in, what is this? You can invest, in your values.
Right.
And so that's really when I started writing about sustainable investing, and kind of on and off throughout the years.
Tell me about going from, working for Dow Jones. I was actually in their offices last week in New York. To freelancing. What was that transition like for you?
Let's see. Well, it was one of those things where I had, the media landscape is not really sustainable.
Right, and it's shifting too over this time. Exactly.
Absolutely. And it was a decision because I had, and two previous jobs I had been laid off.
Okay.
And there was a change at the time in Dow Jones ownership, and there were a lot of people leaving, and we saw a lot of changes, and
understandable.
Yeah. And so in 2012, I'm like, you know what? I'm just going to see what I can do on my own. And in the meantime, I had looked for other places, for other jobs, and I thought, you hear so much of, well, being a freelancer, how do you, that's not really sustainable. That's not really, so, well, neither is the media.
Right.
And I said, instead of one person telling me whether I have a job, I have many people.
Right.
telling me. And so for me, it's been great. So I've been doing it since, 2012. So like going on 12 years.
And you started, at what point did you start? I know you don't specialize in SRI. You really have a broad portfolio of stories, but in many ways, you've really started to lean into, sustainable or ESG or whatever the acronym du jour is.
Yeah, I would say as you mentioned, I always was interested in, sustainability in, some way or form. And for different publications that I worked for, everything from, business the business side of things, we were starting to see more sustainable funds coming up, even to when I would do some lifestyle stories, because I used to work for the Chicago Tribune for a while.
Okay.
I would do consumer finance. I had a column called Savvy Shopper.
All right.
Yes, and there was a greater interest in things like, not wasting food, using products that don't waste food. How do you shop less, shop better? That's angle of sustainability. So, because I was always interested in this topic, I tried to work that into different ways, that I can. So.
And so, how have you seen sort of that landscape shift over that time? Obviously, and sort of to follow up on that. Not only the landscape, but your interactions with editors and people that you're interviewing.
Yeah, it's really been interesting, because I think in the very beginning there was a lot of just kind of like, naivete is not the right word, but just a general trusting belief that whatever somebody told you,
Right. Exactly.
was accurate. So this is where they come to the greenwashing,
which we've talked about many times.
Many times, yes. And we saw it first a lot in products, because Lord knows if there's a way to sell something, we will do that. And so, and as somebody who...
So you're telling me that some of these big fund companies, it's not part of their ethic to do sustainable investing?
Some of them might not.
Yeah, okay. Sorry to interrupt you, but
No,
I just had to clarify that point there.
Absolutely. And, as someone who wrote about agriculture, and I had written about agriculture from large production industrial agriculture down to small organic family farms, I had seen the wide breadth of agriculture, and seen, good actors and bad actors. And so, as a reporter, I always had to keep sort of like the skeptical cap on. And so you would see that in, products. And I actually first saw the more the greenwashing, the backlash towards greenwashing on the consumer side.
Okay.
For things like organic nail polish. Right.
Or, gluten-free vegetables.
Yes. Salt-free vegetables.
Right.
Yeah, things like that. So, and it was interesting that was the first place that you had seen it, and not necessarily in investing. And so I think because I also switching to investing, because I had covered SRI, I was very well familiar with, a lot of the original names of investing, like the Calverts, the Parnassus.
Of course, yeah.
Understand how they approached sustainability. And
all of a sudden you've got this new group that's just jumping in.
Group, and so I was, there watching the rise of ESG with this idea of best of. And for me, I think in the very beginning, I think it was, something trying to be earnest. How can we find, the best or the worst and maybe make them better?
Right.
And use them as an example to make the worst better.
Right.
But then it started to become, something else when they realized, sustainable investors, they're stickier. We have better returns. They have, and there's this idea that we'll take this concept and make it and package it and sell it.
Right.
So that's kind of I hope that answered your question, the full circle.
Yeah, absolutely. And, now I think, if you look at some of the Morningstar figures, there's somewhere on the order of 650 or something ridiculous like that, different funds out there. And, if I'm to pick the ones that we're going to put into our portfolio, maybe 10% of those are maybe not worthy is not the right word, but we'll pass the screens because when you look at these portfolios and you see that they have ExxonMobil in them, or you see that they have McDonald's in them, or companies that would make clients just sort of scratch their heads and say, "What are you thinking?"
Yeah.
It's really frustrating from our perspective. What kind are you doing interviews with some of those managers, and what are their rationale? If anybody you've talked to for owning companies like that?
Well, it goes back down to parsing the E and the S and the G, right? We'll use Exxon as an example. They looked on board diversity. How many more women do we have on our board? So we bring Kai and the social fabric. Look, we built a hospital.
Right.
So we rate high on the social fabric. The same thing, you can look at tobacco companies. I think here is the perfect, this I think is even the greater example. You can look at tobacco companies that do a lot of outreach in, African American
Yes, they do.
communities. A lot, programs that these companies need, yet their product kills.
Right.
So for the investor, it's really comes down to being thoughtful. And I think with sustainable investors, there's this extra level of due diligence, this extra level that you need to think about, do we want on Philip Morris because it does great outreach in some communities, or the fact that it's a tobacco company.
Right. It's sort of that technique that a lot of politicians do, where it's like, hey, look over here while we're doing something else over here.
Yes,
It's a distraction technique. And, so, moving forward a little bit here, we collaborated on an article I think a couple of years ago about climate change and retirement.
Yes.
And tell me a little bit about what your thoughts were on that particular subject.
I'm so glad you brought that up. So I actually just was looking at stories. It was about a year ago in April.
Okay.
So little bit more than a year ago. The idea behind it is I kept noticing so many people were moving to places like Phoenix.
Right.
So many people moving to places like Miami.
Right, exactly.
And
you're saying, what are they thinking?
What are they thinking?
Yeah.
What are they thinking? It was like we was, climate change. We're seeing the effects of, massive heat waves. We're seeing, king tides affecting Miami, hurricane damage. So it was just seeing more and more of this evidence of people moving to places where climate risks were the highest. So, and at the time, there were a lot of stories being done about this. And so, I spoke with my editor, who was I would say is an ESG skeptic. And I, said to this story, I said, well, because this was for Barron's.
Okay.
And I said, the Barron's reader is, we'll call them an ESG skeptic.
Right.
So,
I mean, Barron's is owned by Wall Street Journal, which is owned by News Corp. So yeah, I understand the layers there.
And so I, we were talking about this. I said, if we look at the data of where people are moving, and then if you look at the data of, companies like Moody's, CoreLogic, and other, number crunching, hard data companies are showing this is where these risks are.
Right.
I said, what if we did a story that took away all, the fluff, we'll say, for lack of a better term, and just looked at it from if you're going to retire, and this is an editor who I write a lot of retirement stories for, like, how do you take climate change risks into, into your perspective?
Right.
So, because with this idea, again, and also worked into it, is for most people, their home is their greatest investment.
Of course it is.
Right?
Yeah.
And if you're looking for retirement, you're hoping to be there 20 years.
Right.
Let's say.
Well, and hopefully longer than that, right?
But, the idea that you're going to be there for a long time, and you're investing this money. I said, well, what if we looked at it from this portfolio approach?
Right.
Of, if you're an investor, why would you take unnecessary risk?
This is starting to sound familiar.
Yes. Right. So, and I said, we have so much data from these companies that show these risks. I said, and we're seeing people are moving to areas that are prone. What is this going to mean for insurance?
Yep.
What's this going to mean for your property taxes? What is this? So I said, looking at it from a very dollars and cents. And he liked it. And so, but what sold him on the story is like one sentence is, you may not believe in climate change, but all these other, financial companies do.
Right.
Said, and just like you would not take unnecessary risks with your portfolio, you should work these projections for climate change into where you want to live.
Yeah.
And so what I did was look to add, again, I interviewed CoreLogic, which has mapped every single structure in the United States and its risks for the 5 major climate change. So flood, heat, hurricanes, fire risks. Forgive me the last one.
Drought?
Drought, yes. Thank you. Thank you. We don't have.
We put both our minds together
yes,
here.
exactly.
We'll get it. Yeah.
Exactly. So CoreLogic has done all this data. And CoreLogic is the real estate company.
Right.
Moody's Analytics. I spoke to, Zillow. I spoke to other, all financial companies.
And all focused on data, not opinion, data.
Exactly. I spoke to, I also looked at the weather maps that the National Oceanic Administration, NOAA, thank you. And their maps projecting heat and flood risk, and kind of layer that with the population of where people are moving to. And you looked at places like Phoenix and looked at Miami.
Right.
And did the story on, this is what and we started with if you're living in Florida now, maybe you'll be okay. So, but if you're living in 5 years, you may want to think about this.
Right.
I spoke to a gentleman, I think he's at Wharton, who mapped out property values before and after hurricanes. And again, looking at how much sea level rise will.
Well, then, layer in insurance. I mean, that is that, and we've talked about insurance outside of this particular angle that you were talking about. Insurance. I sound like a broken record because I've probably said this on a bunch of podcasts before. But the insurance industry ultimately is the one industry that can really push climate policy than any others, because they're the ones who are writing the checks when the fires come through or when the hurricane comes through. And we've seen it in California, we've seen it in Florida, we will see it in other states that are more impact prone, where they're pulling out, and people who own places on the coast aren't going to be able to get insurance anymore, and if they are, it's going to be exorbitantly expensive.
Right.
And if they do have insurance, it may not be from the best company that won't be liquid enough to pay them.
Right.
And we saw that on the Gulf Coast of Florida last year, the year before, I think, when one of those hurricanes came through and just devastated, and people still haven't had any resolution yet.
Correct.
Yeah, that's and so once you wrote the article, what was the reaction to the article?
So normally I don't read the comments.
That's smart, actually.
But there were probably 135 comments on this, and almost all of them were complaining, Barron's has gotten woke.
Oh, gosh. And you were very intentional about using data.
Yes. Very intentional about using data. And it was like, why should I take any advice from somebody who went to some mediocre Midwest university, which was comments on there, which
nice.
I jokingly said I'm going to put on a T-shirt.
Oh yeah, I've seen them. I've seen restaurants do that with like their bad reviews. Yes, you should do that with that one.
Yes. So just like savage comments, but none would refute anything that was in the story.
Yeah.
But interestingly enough, so I did 2 other stories because one good thing is, hey, it got lots of clicks.
Yep.
So that
they like that.
They like that.
Yep.
And the editors loved the story. Actually, the editors were very pleased with it. And so they said, well, why don't we look at wildfire and flood risk?
Okay.
And it's okay, great. So same sort of thing, hard data. Spoke to insurance agents, spoke to one of the main insurance organizations, spoke to in California, spoke to someone who was in a wildfire.
Okay.
2 people actually who were in a wildfire and looked at wildfire risk and property values and then insurance, also in Florida. And interestingly enough, when those 2 stories ran, there was like the secret, this is really good information. So it was completely different.
Same outlet or different outlet?
Same outlet, both for Barron's. and both linking back to the original story, but because, the focus wasn't so intensely on climate change, even though climate change was mentioned, like, flooding is getting worse because of climate change. These, Zillow is including flood maps from NOAA. This is how you can look at your flood, even though there was lots of information about how companies are using climate data.
Right.
And this is something you should think about when you are buying a home or when you're trying to protect your home. Completely different reaction. And for the flood story, I actually had people talking about Fort Myers, which is where that
Exactly. Yeah.
was, and the problems that people were sitting trying to rebuild. So completely different reaction.
It just amazes me because you broke it down in a way such that it was less threatening almost.
Yes.
And so that's that. I've got one final question, but I want to just follow this track just a little bit longer here. Is how do you, as a journalist who obviously wants to make an impact, you wouldn't be talking about sustainable investing and doing stories on that if it wasn't important to you to make an impact and to educate people.
Right.
How do you, what did you learn, let's put it this way, from that first article that got such a negative response to the other two articles that didn't get as negative a response?
I think it comes down to like specificity.
Okay.
I still think climate change as a topic is big and scary.
Yeah.
And people just want to put their, head in the sand. But when we talk about like specific risks and relate it to people who have gone through these specific risks, it's a little more relatable. And I think it feels like something people can do.
Right.
Too. Like, if I'm looking for a home and I can look at a floodplain map.
Right.
I can look at, is my entry space 6 feet above ground level?
Right.
Do I have a basement? In wildfires, am I planting 6 feet, 10 feet away from the house? Are there things I can do to mitigate my own personal risk? Mm-hmm. So I think that's what
that makes a lot of sense to me. And it's interesting because a good portion of my job is talking to folks like you and thought leadership and doing the podcast and stuff, because we want to educate people. We want people to understand. And I think we're getting to. I've long said that climate change will become more accepted when people start to feel the impacts directly on them or their family or friends. The problem is when it starts to hit your family and friends and yourself, it's probably too late.
Yeah.
And so but the more we can get people to relate, the more we can get people to put themselves in the shoes of the person who was in the fire, for example. It just gives them just that little nudge to maybe pique their curiosity.
Yeah.
It's interesting. I was talking to somebody the other day about EVs. And how you might be in an area that tends to be more conservative and driving through, and you stop at the store, but there's a curiosity about the Tesla. Mm-hmm. People will come up and say, is that a Tesla? Yeah. Well, do you like it? Yeah, I love it. How many miles do you get? There's a curiosity to it. And so how can we continue to foster that curiosity and change minds and get people to understand better? Here's what's really happening. Yeah. It's the entrenched interests that don't want you to change.
Right.
So.
And it's, that's a big question, is how do you get people to change? And I think it's just, for advisors, it's like, really getting to know your clients.
Yeah.
Right? Knowing what, and I think, if someone's coming to you or to another sustainable investor, they're kind of there.
They're probably already there.
There. But, if you're dealing, at Thanksgiving, with, your crusty uncle.
Yeah.
There are things that you can find common ground. I think, absolutely. And I think for like the crusty uncle, for that, a lot of those people are just very independent.
Yeah.
Right? Well, having solar panels on your house is...
It's about as independent as you can get.
Yeah. Right? Getting back to investments, I think there's also... And it really comes down to being thoughtful. Like, what is it that you want with your investments? And I think this was the problem with the big explosion of what I used to call light touch ESG ETFs.
I call it less bad.
Less bad.
Yes.
Okay. It was an unthoughtful way. And I mean, to some extent, people really don't have a lot of education in investing to begin with.
Right.
So, yes, where you can say, well, you should have known better, but it's like, how do you educate yourself on what's important to you as an investor?
Right.
We'll use Tesla as an example. Do I love Tesla because it's, green energy, it's less carbons, or do I have a problem with the fact that labor? Do I have a problem with the fact that, Elon Musk has 12 children?
Yes.
and
Which I just found out the other day.
Yes.
But yeah.
And, treats his employees.
Yeah.
Terrible. It's, again, no company is going to be perfect.
Right.
And unfortunately, we all have to kind of make these compromises, but it's understanding what you're okay with.
Yep.
So that's
it's understanding shades of gray,
Yeah.
basically. So we're going to go to our final question here,
Okay.
and of course the first of these questions was posed to our friend Ed Begley Jr. So and I thought he did a great job with it, but. We see the effects of climate change hitting from, I was in New York last week and it was in the 90s in mid-June. It was crazy hot, to more intense storms, to the fires, to the droughts, to all that. So in light of seeing the reality hit, how do you maintain hope?
Oh, wow. I maintain hope because I look at younger generations. My husband's a school teacher. And there's, a lot of interest in caring, I think, for each other.
Right.
And there's also, a very much interest in being more environmentally focused.
Right.
Too. I think, especially as there's, focuses on things like science, in schools and, looking at ways to educate children that when I say children.
I get it.
What gives me hope is that, there is, a lot of concern about the environment, and it's, again, just trying to kind of push that over the line and because part of the rise, I think, of sustainable investing was because we did not see any actions taken by politicians.
Right.
And, perhaps, we'll start seeing that. I mean, the IRA Act was wonderful.
Yeah.
I mean, yes, it could have gone further, naturally. But the investments...
That's just politics.
Yes, exactly. Yes. But the investments in infrastructure is amazing. And, we're just seeing it. I just actually wrote a story about like silver and silver's prices going higher. Why? Solar panel production is skyrocketing.
Right. And you need
silver for that. And it's just continuing to go, unabated. And even if there are, changes, that's just like something that's not going to stop.
Right.
So is it, yes, too little, but, we have to do somewhere.
The climate change train has left the station. But so has the clean economy train. Yeah. That is also left too. So no matter what happens with politicians or anything else, that new economy is heading our way south.
Yeah.
Debbie, thank you so much for being a part of this. And thank you for tuning in. A couple things. First, make sure that you like this episode and that you follow us on YouTube and whatever social media that you follow. And we will see you next time for our next episode. Thanks for watching.